Hello everyone, how's it going? In this video, we're going to talk about Lucid trading under the ticker symbol LCID. It has been one of the most speculated stocks in the Nasdaq. Some have said that it could be the next Tesla, while others believe that it's just going to be a giant bubble about to burst. Lucid is one of the few companies that has an actual product rolled out. And as time went on, the stock price action, along with investors' hope, went through a lot of roller coasters, and some are still wondering if this is a bandwagon that they want to hop on. In this video, we're going to look at Lucid and to see if the stock still deserves to have a place in our portfolio. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links down in the description section, as every help is greatly appreciated. As of today, the Lucid stock identified under the ticker symbol LCID is currently trading at around $7.41, reflecting a further increase from Monday's closing price and indicates a positive momentum that will be continuing. The stock recently experienced a surge of around 7.3%, and this marked the stock's sixth consecutive gain and represented one of the longest winning streaks since company's listing back in 2021 with the merger of the SPAC. Additionally, it was the stock's best performance stretch since January of 2023, when it went up by 36.1%. Now, despite a relatively bearish analyst note recently issued by Citi Research, resulting in a neutral instead of a buy and a $8 price target, Lucid's stock remained very resilient. So the previous rating was a buy with a price target of around $11.50 before 2 months happened without anything going on. And then McKinley announced that Lucid's positive technological standing relative to the peers is kind of wobbly, and some uncertainties around the near-term demand for Air, like the Lucid Air EV. And also, the company's gross margin performance is also to be improved. So these are the reasons why Lucid had a neutral rating. Now, the encouraging sign with the upbeat delivery, the production data, and other EV manufacturers' information during the same period of time definitely helped in pulling Lucid's stock performance upward. So some of these EV manufacturers are Tesla with a 7% increase, NIO with a 4% increase, Rivian with a 17.4% increase. So Citi has recognized the fact that the sector's positive momentum is helping, but also they recommended caution for Lucid's near-term demand and gross margin. So he said that to that, our third-party data checks are not discouraging, but didn't quite give us sufficient conviction. So this is why we recommend to wait for an opportunistic entry point. Now, the recent price cuts to rival EV models, especially to the ones of Tesla, and also the timeline till 2024 with Lucid Gravity is some of the risks for Lucid's gross margin outlook. And the anticipation currently is that it's going to be a very good, it's going to be a huge boost once Gravity SUV is released. Now, they're saying that they're going to release it in 2024, and then the market watchers are also awaiting for this arrival. Now, with that being said, I would say that this is a typical case where the overall market is pulling an individual stock, even if the fundamentals may not be at their peak. How can I put this? At their peak sentiment. With all that being said, let's also take a look at the technicals. The trading volume of Lucid is around 54 million shares versus the average volume of 55 million shares. In the past 52 weeks, the price fluctuated between $5.48 and $21.80. The volume of shares traded tells us how many shares are being bought and sold at any point in the market and if there's enough liquidity to support a trading strategy. If the float is thin, it's going to be easy to influence the stock price, but low liquidity can signify that the demand is limited as well. When we compare the current volume against the average volume, there might be the possibility for a trend reversal or breakthrough if the difference is very large. For example, if the stock were to break through, the current volume can be significantly higher, which is not the case at the moment, like significantly higher than the average volume. That's not exactly what we see, right? Meanwhile, the market cap of Lucid is currently around $13.6 billion versus an enterprise value of $12 billion. So a very slight premium. This is what we like to see. It means that we're probably not buying it at a very expensive point in the market. However, the market also has pretty high consideration or relatively high considerations for Lucid. As we compare the current price to the historical price fluctuations, the stock is 36% higher than the 1-month low, 36% higher than the 3-month low, and 36% higher than the 52-week low. On the options market, it seems like the implied volatility is currently around 85% versus a historical volatility of 81%. The put-call volume ratio is currently 0.35, and it's normal for most stocks to tend to have a higher put option volume than what they truly deserve. Now, this clearly shows that most people in the options market are saying that Lucid is probably going to go higher from where it currently stands. The most recent volume of options traded is 182,000 contracts versus the 30-day average of 150,000. In terms of open interest, the most recent volume of open interest is 1.1 million contracts versus the 30-day average of 1 million contracts. Regarding the shareholder structure, institutional shareholders own 73% of the outstanding shares. The biggest shareholders include BlackRock, Invesco, and Vanguard. Now, typically, it is better to see some institutional participation in the stock for the long term. And in this case, I would say that it doesn't really require an explanation or any sort of promotion. Institutions like Lucid. Institutions want to stay in Lucid for the long term. And I think that this is something that we, the retail traders, should consider as well. Now, I personally consider the minimum threshold to be around 25 to 30% for institutional ownership, but of course, in this case, it's way beyond this threshold. The current short interest is around 24% of the total float, 55% of which coming out from the dark pools. Now, typically, if there's more than 15% of short interest, it means that there might be an institutional and concerted short strategy. And it may also suggest that there could be a short squeeze. Lucid Motors, also known as Lucid Group, is an EV manufacturer poised to shake up the industry with a cutting-edge technology and its sleek designs. It definitely stands out with its advanced battery technology, designs, and commitment for long-term sustainability. One of the key differentiators is the battery technology. Lucid Air has significantly longer range and faster charging time. Another reason might be where the company is or who created it where that actually matters. So previously, before Lucid became public, many people were saying that the next Tesla might be NIO. However, due to regulatory and also distance issues, I would say that many people were worried that their investments may not have the best oversight. I'm not saying that SEC is perfect, but comparing to something that is right under their nose versus having to travel half the globe in order to find the operations and the market sales and so on, Lucid would present a more safer option compared to NEO. And this is what also prompted many people to focus their attention and, more importantly, their capital on Lucid. If we look at the long-term tendencies of Lucid price action, it's not hard to see that a bubble that gave so much hope back in 2020 now bursted. The market no longer wants to blindly follow the hype, because on one hand, it cannot persist on believing that the bull market, based on purely assumptions, can continue like this. On the other hand, it simply cannot afford to sustain this trend when so many obvious issues, like supply chain issues, doubts on flagship companies, doubts on demand, the end of subsidies in many key markets, the conflicts around the world, and higher interest rates attracting the capital, have been plaguing the financial system as well as the real fundamentals out there. The market has long predicted that there will be a bearish market after such a prolonged bull market, and that most stakeholders believe that it's going to be a rough patch for at least a couple of years. The market peaked twice in the past, and if the first peak was caused by pure hype, the second one was then triggered by the rollout of actual products. Lucid remains one of the more solid companies in the sector and has kept its investment value or potentials for the years to come. The main question in everyone's mind is, when should they enter in the stock? The long grind to lower price levels is likely going to continue, or at least the tendency may be there. But when we look at where it might lead the stock to, sometimes they can go to surprising levels. For example, I personally don't consider that Hyliion, another EV truck manufacturer that has also made the headlines back in 2020, deserves the price that it has now. Nevertheless, the sell-off continued for years without an actual reason other than people have lost confidence and or trust and or patience with it. So the same thing could happen with many other players in the EV sector. There is no fundamental phenomenon or reasons to support those sell-offs, but at some point it also doesn't have to matter, because they simply have to believe that there will be no new money to pour in the EV sector for the shareholders to eventually lose hope and trust and patience. In terms of the financials, Lucid had a strong financial performance in 2022. The company reported revenues close to $200 million in Q3 of 2022, which is a significant increase from just above $200,000 in Q3 of 2021. That strong growth was driven mainly by the launch of Lucid Air, the company's first vehicle, which began deliveries in late 2021. Lucid Air is a luxury electric sedan well received by the consumers, and also helped the company to establish its reputation as a major player in the sector. Currently, Lucid has a negative net income, caused by the fixed costs and other operating expenses that should be absorbed as the volume picks up. Overall, I would say that Lucid's financial figures paint a good picture about the company, but it's also demonstrating that Lucid is lacking a little bit of discipline in terms of cost control. Nevertheless, I would say that in the years to come, they would still focus on growth rather than cost control. Now, let's also talk about the shareholder composition of Lucid, because it is something that it's quite important to determine if the company is better for trading or investing. Lucid is currently held by institutional buyers for the most part, by more than 70% of the total volume. This would suggest that the price volatility may be lower than other stocks held mainly in the hands of retail traders. One key behavioral difference between institutional and retail traders is their horizon. Institutionals tend to have a longer-term view, which focuses on the company's fundamentals and the years to come when it's not the decades to come. They're also less likely to just jump in and out of a share because they can afford to have the loss. The short interest of Lucid has been significant over the past few months. It means that more and more investors have been betting against the company's stock by short selling it. Short sellers borrow shares of the stock and then sell them in the market, hoping to buy them back later, profiting from the difference. As of the recent data, short interest in Lucid represents 7.5% of the company's total shares outstanding. This is a moderate level of short interest, but significant nonetheless. It is important to note that the short interest is not a guarantee for a short squeeze, but it's still a very important metric to monitor, because this can tell us what is the current sentiment or the vibe about a stock. It's also worth noting that short sellers very often have actual valid reasons for their bearish sentiment, and that a short squeeze, no matter how likely it seems to be on paper, may never happen. Now, based on the recent performance of Lucid Group and the information that we have, my recommendation is, if you already own Lucid shares, it would be a pretty good idea to keep a close eye on any sort of updates in the upcoming weeks and months. Watch out for news about new demand for Lucid Air, the gross margin, and also about anything regarding the Gravity SUV in 2024. Those updates are going to give you insights into how the company is moving forward, and that's probably going to have a huge impact on Lucid's stock price. For long-term investors who believe in the technology, then it's definitely going to be in your interest to hold on your Lucid shares in like the longer term, for example, 3 to 5 years. Now, if you don't currently own any Lucid shares, but are considering investing, I would say that a current price point is an interesting entry point to begin accumulating a position. I would recommend to commit between 3 and 5% of your portfolio's capital into Lucid.